Good morning, boys and girls. I would like to mark exercise 33 and 35. It's lesson 8, continue on lesson 7, your general ledger. On page 70, you will find exercise 33, and it gave you a list of accounts, and I've already written the memo down on the board, so I'm just going to explain it to you just to save some time with the video. So I'm going to work from the bottom to the top with your first column, and then from the top to the bottom with your second column. All right. So when you look at your list, the first one is then vehicles. Now, why did I put it into the balance sheet account? Because vehicles is an asset. All right. Then capital is owner's equity. That's what's part of your balance sheet. Sorry, because the definition, remember, with the previous lesson, I said your balance sheet, asset, owner's equity, and liabilities. That's your balance sheet, all right? And your nominal account is all your expenses and income, all right? So let's see the next one, current income. So current income is an income. That's what's in the nominal accounts. Bank charges is an expense. Okay, that's what's part of your nominal account. Your rent income is an income, so it's nominal account. Insurance is an expense. No, sorry, equipment. Equipment is an asset. So I just want to see, I've skipped something now. Rent income is your income. Insurance is your expenditure. That's why it's nominal. And consumable stores is an expenditure. That's why it's nominal. Okay, then your second list. Drawings. Drawings is owner's equity. The owner withdraw the the money out of the business bank account for its own personal use. That's drawings, so it's owner's equity. Then salaries is an expense. That's nominal. Wages is an expense, so it's nominal. Land and building is an asset, so it's balance sheet. Then bank is an asset, balance sheet, but bank can also be a liability. That is when you withdraw more money out of your bank account than the balance that you have in your bank. All right, so for instance, you've got, say, 30,000 Rand in your bank account and you withdraw 50,000. Then you owe the bank money, then the bank is your liability. Okay. Then advertising, that's an expense, so that's nominal. Donation is an expense, nominal. Sometimes donations can also be an income for the business if they receive a donation from a source outside. All right, but mostly the business will give a donation to, say for instance, the old age home or a school or whatever, then it's an expense for them. And then lastly, your cash flow is an asset. An asset is part of your balance sheet accounts. Okay, boys and girls, still the homework of the previous lesson 7. This is now exercise 35, page 75. If I remember correctly, I've done number 1, 2, 3, and 5. So I should actually only do then 4, 6, 7, 8, 9, and 10. All right. So I've written 3 there so that you can just see if you paid, your money flows out of your bank account. Sorry, that's not Afrikaans. I just want to fix it. Sorry, that was not Afrikaans. I hope everything is in English now. So when your bank decreases because you made a payment, money flows out of your bank account So your bank will decrease, and that will be the credit side of your bank account. That's in your books, okay? So your bank will be credited, and then what did you pay? What did you buy? Consumable or consumable stores, all right? So let's start with number 4. Issue a check. So you give a check to somebody, so you are paying somebody, and if you pay somebody, money flows out of your bank account, your bank balance decreases, so your bank will be credited. Okay, remember CR is credit, DRA is debit side, alright? So what did you pay with that check? You paid the insurance. So insurance is going to be debited, alright? Then number 6, cash check. So you cash your check to pay the wages. Money flows out of your bank account decreases, so your bank will be credited. What did you pay with that money? Wages. Okay, so remember, now in accounting, each transaction has 2 accounts. In grade 8, one account will be your bank. Your bank will decrease or your bank will increase. Right, so one of them will be bank, because in grade 8 we only do cash transactions. Alright, so that's your bank. And then, whatever that you pay, who did you pay? No, that's not important. I paid the municipality. No. What did you pay at the municipality? My water and electricity. Alright, so you've got your 2 accounts. One will be debited, the other one will be credited. So if you know your T account, what I'm trying to tell you now is, look at number 7. It's check for own use. So the owner took the business check for his personal use, and that's drawings. You need to know your definitions. In the beginning of the year, we did that. Alright? So the owner took money out of the bank account of the business for his own use. So bank decreases, your bank will be credited. For what? What did we do with that money? We gave it to the owner for his personal use. So that's going to be drawings. Drawings will be credited. Can you see each time that I take money out of my bank account decreases, so my bank account must be credited, alright? And then whatever we buy, whatever we pay, that will be debited, alright? Look at number 8. Receive money from your clients for services. Services is going to be current income, alright? So what's happening? We are receiving money, so if money flows into our bank account, our bank balance is going to increase, so that means my bank account will be debited. And I've received money for service rendered, and we name that current income. Service rendered, the T account will be current income. Then number 9, we cash the check again for cash flow. Remember what's cash flow? That's what are we going to do with that? That's the change that we're going to put into our cash register, okay, to hand out some change when my client comes in and purchases something. That's the change, right? For my customers that where do I put it? In my cash register every day, right? So my bank, money's flowing out of my bank account, so my bank account is going to decrease, so my bank account is going to be credited. What did I pay with that money? I brought it back to the business, and I took that money and I put it into my cash register for cash float. Right, that's my change for my customers. Right, then the last transaction says bank statement. So that is how the bank's going to communicate with me. They're going to send me a bank statement. I can get a bank statement every day if I want to, but it's going to cost you money. So mostly we get a bank statement once a month, all right, at the end of the month. So the bank statement, remember now, the banks see us as a creditor, because he owes the money to us. So your mom and dad, if they show you a bank statement, the bank statement, the debit will be minus and the credit will be a plus. So it's the opposite of our transaction. All right, you don't have to worry about that. In grade 10, when you do take accounting, we'll look at that a lot. All right, but I would like you to know that the bank statement, their debit, in their books is a minus and credit is a plus. So when when we receive the bank statement, it's going to show you interest, okay, that we've received. So they increased my bank account with the interest that we've received. But now I read the bank statement. So what does that mean? Money came into my business. The bank paid money into my business. So my bank balance increased. So in my books, I'm going to debit the bank account. And what did I receive that money for? For what? For interest on current account. So that is when your bank account, when it's a positive bank balance, when you have a positive bank balance, the bank will pay interest into your bank account, so you will earn interest, okay? So when you have a negative bank balance, then you have to pay the bank interest, and then that transaction will be swapped. Then it will be credit bank, because you made you owe the bank some money, so you made a payment to the bank, and then your interest on overdraft account will be debited. All right, thank you.